Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss the TD fiasco, job reports, and an updated spy plan.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us.
Pennies.
Going in raw.
Featuring Dan, Deity of Dips.
And Hugh, honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, July the 10th. And I mean, we're on the up and up. I know I've got a little inside information that you want to start shorting. I mean, we're at around 390. We talked about how we wanted to hit this mark a while ago. We expected it, but then it ended up being this kind of like slow grind back up. What do you kind of think about it, and how's your plan kind of revolving around it?
Yeah, so my plan is first not to get my face ripped off. That's the first.
Always a good step one.
Yeah. That's pretty much the first thing, is that I don't want to get my face ripped off. So I have about a 20% position on. I have
It's still a
about
big
20%.
position. Oh, 20% of a position, or
Oh,
I'm
yeah,
thinking
no,
20% of a cow. I'm like,
of a
Jesus Christ.
Yeah, no. No. It's a 20% of a position, and so basically the way that I'm handling this is that the SPY has a clear. Let me just pull up the chart, and if you guys are at your desk, you can pull up the. We'll go to the 90-day 1 hour chart. Yeah, I like that.
And
if
you're driving to work or whatever while listening, wait till you get to work.
Yeah. And so basically, if we look at SPY over the past 90 days, we've been following the same kind of pattern, stair-stepping down. But the one thing about the stair-stepping is that we kind of always come back up. And again, we're in, bear market, so we have bear market rallies. Bear market rallies, and I'll say this till I'm blue in the face. Bear market rallies will rip your face off, and people get smoked trying to get short bear market rallies too fast, and that's essentially what cause and effect of why. And so that's essentially the cause and effect, is because people try to get short too quickly on bear market rallies, and they end up getting squeezed higher. As we know, traders, especially, and investors, they like to go long more rather than go short. We know that 70% of traders, I think it's like 70% of traders would rather go long 100% of the time than go short 50% of the time. And of course, I think part of that is like a little bit of an American thing, especially like if you're an American or you're a Canadian or, you're in Europe, or if you're just a human,
you went from an American thing to if you're just alive.
Yeah, well, seriously, like if you're just alive, especially because, see, it's different when it was like GE was only in America. You know what I mean? Like people in Europe aren't going to be like, go GE, it's only an American company. But like, then I started thinking about it. I was like, oh, well, every major company is worldwide.
Yeah, it's globalized. Yeah, everything is.
So So when I say that, it's like you want companies to obviously do well, because sometimes you might work for a you might work for that company, you might work inside that sector, you might have a family member that works, so you just want the company to do well. Okay, and I get that. But the issue with that is that when you're inside a bear market rally, a lot of things do force the market lower, and the biggest thing for me is that, and again, we talked about a lot, is where the price to earnings ratio is. Okay. There's a lot of things out there, a lot of speculation about where the market should go. The only thing that I typically pay attention to when I'm talking about the broad overall market is price to earnings ratio. And, we can look at historical bear markets, you can do stuff like that. But the only problem with that is that you're looking at historical data that can be changed in the blink of an eye. And we talked about it, I think 2 weeks ago, is that when you have, 50 years worth of data, how many bear markets is that? 4?
80, 2008.
Yeah. You got the dot-com bubble. There's like 4 or 5. I mean, yeah, and so even though 50 years is a long-ass time, that's really not that long when you look at it on a scale. It's still
it's like when people talk about like, hey, every time Bitcoin goes through a halving, it goes up thousands of %. Well, we've only had 4,
Exactly. And so that's why I think that it's really important to think about that when we're looking at the market. And so I personally like to look at price to earnings ratio. And price to earnings ratio, we want it around, we definitely want it sub 20. And I think at this spot, we're like 24 or 25. And so, really good price to earnings is anywhere between 15 to 18, which is, last time I looked was, and again, of course, we have earnings coming up, which is a big thing. But for me, that 3,300 handle on the S&P 500 is fair value for me. That's fair market value. So when I look at this rally right now, do I think that bottoms in? And I just gave my first reason because of price to earnings ratio. No. Second thing is the volume. Volume is super telling. And so when I switch, when I'm on the, I'll use SPY just for the sake of it. But when I'm on SPY and I'm on the weekly chart, the last few weeks, which last few weeks where we've kind of been inside this range of 369 to 391 have been some of the lowest weeks this year. And the biggest week that I see is that first drop down from 479. That week when we went from 457 to 438. That did almost 1 billion shares traded that week. This past week, we did a third of that. So
is some of that summer, or is that just parts of a bear market? Yeah.
For sure, some of it is summer. However, a lot of it is summer. But that's part of why I don't necessarily think that bottom is in. Because again, is that fair market value for me personally is 3,300. Now, that's going to be like my personal spot. Now, again, can it go lower? Yeah, of course. Can it, and it probably should if that's fair market value. You don't really want it to bounce right at fair market value. But, we came down, we tested that 200 moving average, and so far we're holding that, which should give bulls a rather really good sign. And again, we're consolidating. But the one thing is that there's not sellers drying up and there's not buyers stepping in. You know what I mean? Like if we were trading 6 to 700 million shares, and we were trading 6 to 700 million shares, and we were still holding around here, and we were slowly making our way up, I would say that sellers are starting to exhaust, buyers are stepping back in, people are more confident inside the macro situation, in the economic situation. Now, we did have a really high volume day, a really high volume week on that week that we hit that 200 moving average. So we went from 282 down to 360. Excuse me, not 260. 360. That week we traded 600 million. Now again, two things that align there. Good volume, and we bounced off the 200. So that should have been, and of course, hindsight 2020. Going into that next Monday, it should have been like, okay, we had good volume. Maybe this is capitulation. And we bounced off the 200. Like in hindsight, that should have been the spot that to go long, at least for a rally. And again, if you had gone long on that Monday, you would have had a pretty good bounce back. You would have had like a 20-point bounce back on the S&P. So, as I was saying, we really don't want, if we inevitably break that 200, that's when we see another move down. But this goes back to my whole point. So we just talked about why I think that we are probably going lower. Now, the point to building that short position is for a few reasons. As we just talked about, is that every single smoke show that we've had on the market, we've had a pretty decent bounce back. Now, we've had a really decent bounce back. We tested that 370 area a few times, and since then, we've rallied 18 points. And that's since that was just this week. So really good. So I think it was that Monday, we were down 2%. And by the end of the day, we finished green, I think, or just red, barely red. And then since then, it's just been up and up and up, 18 points. So we're getting close to that last sell-off spot, which was about 392. And then on top of that, if we do get there and we do break through, I think that we might see 400. So that's why I kind of gave a broad scope of 394 to 404, because anywhere in there is kind of like dead man's land. When we rallied off those first lows, when we hit 380 or whatever back in May, we rallied all the way back to 420. And then we held that really big, consolidation for 2 weeks, and then we got smoked all the way down to 370.
Yeah, it
and
looked like
then,
it wanted to try that 392 Friday, but it was like, you know what? We'll save this for next week.
Exactly. And so this is why this is such a big spot, and why the market's rigged. Come on, don't tell me that this is a coincidence that we're sitting right at resistance.
Yeah.
Big resistance going into Friday. Don't give me that. Come on. So we're coming up to that spot. And again, is that people are probably piling in short here. And there's two reasons. And again, that kind of scares me that people are piling in short, because I typically don't like to be on the same side as everyone. Even though I'm a mostly intraday trader.
You're just going to talk yourself out of making a good trade. You're going to be like, oh, shit, well, everyone else is doing it, so I should. And then everyone else makes all the money.
There was someone that said, I said that I was short or someone and something. And I pay attention to Twitter. And so there's this one guy who always comments on my stuff. And I think he's a troll. Actually, I really don't know. But he had commented underneath my thing and was like, and I was like, yeah, I'm just looking for, I'm going to short up here, blah, blah. And he just comments. He was like, try 365 or something. And I was like, I just messaged him and I was like, you short? And he's like, hell yeah, we're going to the gutter. And I was like, oh God. I was like, I was up 0.5% at that point. I was like, no, I'm about to cover right here. This guy's kind of scared. He was so confident. And I was like, why? And he's like, fuck this market. And I was like, oh God. I was like, that's the big analysis. It's just fuck this market.
Honestly, I like it, dude.
Yeah,
I mean, if you're looking at it from a fundamental perspective, fuck this market.
Yeah, but I was just like, oh man, we can't get anything else.
I think that's pretty sound. I think he's got it covered.
Yeah, exactly. And so the biggest thing is that I want to see what they do Monday and Tuesday. So I'll probably be trading pretty lightly on Monday and Tuesday. Now, if they gap it and go, I really hate those days that they gap and go the market, because it's just one of those slow grinder kind of days.
Yeah, and on such little volume, it's tough to tell what to do the next day. It's like, was this
exactly
what's supposed to happen, or is this just the 14 people with billions of dollars playing with it?
Exactly. And here's the thing is that we talk about like if a billionaire comes in and starts selling his shares, he's going to smoke the market 2%. You know what I mean? Like so that blows too. Because you don't want to get long, and then volume come into the downside or the upside, whatever, and smoke it. So the biggest thing is that, like I said, is that Monday and Tuesday I'm going to play really tight, and like I said, is that my favorite setup. As you guys know, I tweet my levels out every day. My favorite setup is basically waiting for confirmation of a failed follow through and then shorting it down. And that's my favorite thing. And again, is that even though every day I go in, or like even right now, I go in with a thesis of what I think is going to happen, what I want to happen, all this type of stuff. Intraday, I changed my mind a million times. So like Friday, I was like, man, like I think the market kind of gets smoked, who wants to hold risk over stuff like that. And the market went down like 0.5%. Didn't even touch it. However, I went long calls. I sold them for like 40%, but they went 200%. And but that's a time where, my thesis was I think we're going to be red. We went red, and I decided to change my thesis based on, indicators and other things like that. Went long, banked on that, and then called it a day. And so, that's why like I think it's really important to not get this like over bias stuck. Even though I have this 20% short position on, Friday was still an excellent day for me. And so I think that that's really important, is that not getting like the guy inside my comments who 365, like that's it. Like it's going to 365 this week, like shit like that. And I just think that's important, and he could be right. And that brings me to my next point about Monday and Tuesday of why I'm playing super light, because Wednesday CPI. Now, obviously at this point, I would bet that 20% of you that listen didn't know what CPI was 2 years ago. I would bet 20% of you didn't know what CPI was 2 years ago, and now it's like everybody's favorite thing, not favorite thing, but favorite thing
It's
to
on your
talk
mind,
about.
yeah.
Yeah, on your mind. And so Wednesday is going to dictate a lot. Again, we're at this resistance zone, this big resistance zone where if we break through, we're looking at least 3 to 4% upside. The market's rigged. This is all a game. Okay. We're sitting at this resistance zone waiting for CPI. CPI is either going to do what? We're either going to blast through this resistance zone, and we probably test like 404 again, maybe 410, or CPI is fucking dog shit, respectfully, and
that guy's
smoked.
right, 365.
And the guy is right, 365, exactly. And so that's why, like, this is like, like all of this is a game. It's all at this pivotal spot. We really don't know what's going to happen, obviously. And if you do, don't shoot me a DM.
360. He did. He said 365.
Oh God, could you imagine if like Friday, if I come on here on Friday and we're
just sitting at like 364, like
chilling. Yeah, 364.99. He was like, I gave you a cent.
Yeah,
I gave you a cent to get out. Yeah. Oh God. Now I'm sweating thinking about it, because that's probably what's gonna happen now. Now I just like now that I'm like, oh God, I can't even think. But that's the reason I'll be playing light. And again, is that I think that Wednesday kind of gives us some trend into earnings. And then I think earnings, like personally, my big overall thesis is that CPI will be bad. We will go and probably test 370 within a week after CPI. Then we have earnings. And I think earnings are what pushes us down and kind of smokes us a little bit to that 350 zone. And then I think same pattern that we've seen. 350, consolidate, make a big move back up, maybe to the 370s, and then we go down for the 330s, 340s. And then that's when I would start to think, okay, now we're starting to look at really good spots to add long. And honestly, if you have no money in the market, honestly, like any lower, like, especially, I know we talked about it, but 370s, not a bad spot to add some. Not bad at all, actually, to add some.
Yeah, if you're going cost basis, for sure. I mean, good time to start.
Mm-hmm. I don't necessarily think like 420 is a good spot, but 370s,
Yeah, I
not a
think
bad
we
spot at all.
were close to 500 just months ago. So
Yeah,
good time to
exactly. So
start.
if we do get that 330 spot, I mean, that's going to be a really nice spot. So, and then let's talk about job reports.
Yeah, it did
Because
come
I
out
saw
that better than expected.
Yeah, so better than expected, and I had a few questions about this. I had a few questions about this. Is that why the market was red on why the market was red on a good jobs report? And this is why I want to take over the education system, because it's really important to understand economics on a lower level. Like, we don't need to go all crazy with like
I like how your answers taking over the entire education system. Maybe not adding a macroeconomics class to every high school. You're like, I am going to be the Secretary of Education, and I will reform it all.
Exactly, except the English and writing part. That part I'll leave to someone else.
Yeah, maybe a good idea there.
However, cooking classes for all. Everybody's gonna know how to make a bomb ass cake.
That would be dope, dude. Super bad.
I don't know
maybe
how
want to have a cooking class. Yeah.
Yeah. I don't know how to, but my son will. There's gonna be a really basic 5 minutes macroeconomics by Hugh. Because I got a lot of questions on this. Okay. Typically, real quick, the Fed controls the economy. Well, obviously not controls, but they're the enforcer, and kind of, they keep shit in line. They're like whack-a-mole, whack-a-mole. And so when the economy's doing really well, they want to slow it down. When the economy's doing really shitty, they're going to help her out. They're going to give her a boost. Now, because of COVID and because of the entire, economic situation that we were at during that time, we'd never really been inside a situation like that. So what did we do? We pumped tons of liquidity and tons of money into the market, 10 times more than we ever have. But what did that create? That created a really big issue, because that pushed up inflation, and it pushed up inflation and made our economic situation now worse. Now, I'm not going to say it's like cause and effect. However, some people do say that. Now the Fed is kind of inside a pickle, because here's the issue, okay? As we just talked about, the Fed typically wants to carry the market or help the market out when the economy. When the economy is not doing well, the Fed helps it out. When the economy is doing bad, I just got that so wrong. I said that so many times backwards. The Fed helps the economy when the economy is not doing well. The Fed pushes the economy down, or kind of tightens it, when the economy is doing really well. Now, the pickle that they're in right now is that the economy isn't doing that well. However, they need. I was going to say they have to, but no, they need to tighten the economy because inflation is so high. So the issue with that, though, is that typically when you raise, like, let's take raise rates. Okay, raise rates is one of the ways that they can control inflation and bring down, and help the market, and not help the market out, but stop the market from growing at insane rates. Well, the issue with that is that when you raise rates, typically unemployment rises. When unemployment rises, people obviously lose jobs. When people lose jobs, if they don't have enough savings and they can't find another job, then, sometimes they default. They got to sell their homes, their cars, stuff like that.
Stocks.
And then that's when you see, tough situations. And so the problem that the Fed is having is that we're not doing too well as an economy. However, because inflation is so high, we have to raise rates. And so in doing so, we're raising rates, but when we raise rates, we know that we're going to make the economy worse. It's kind of one of those things where, like, we got to make it worse to then make it better. So, but from the market perspective, we don't want to raise rates because that makes money more expensive. That makes, margins smaller. There's so many things, harder for companies to borrow debt. There's so many things. And so the issue is that when there's a good jobs report, like we just had, or I'll say a positive job report, it's not necessarily good. The issue is that gives the Fed leeway to now be aggressive with raising rates because we haven't seen the cause and effect of tightening the market. Now, if the jobs report was bad, then the Fed would kind of come together and say, okay, listen, the economy's not doing too hot, but clearly we're starting to see signs of a slowdown, so we don't need to be as aggressive.
Okay, and one more thing. So obviously we've been keeping up with the whole Elon Musk situation in Twitter. So he said he wants to back out of it. However, Twitter just came out and said, you can't do that. You are going through with this sell. What does that mean for Twitter? What does this mean for Elon? Is this just a complicated situation involving just someone buying something really big?
Yeah, so the first thing is that no matter what, this will be, if this does go to court, which it sounds like, Twitter obviously said that they were, this will be in court for years. And that's what Elon wants, obviously. Like, Elon wants that. Because management will change, the stock price will probably go down if we do officially go into recession, or if we continue down the recessionary path. And so that's kind of like, Elon's fine with that, and again, of course, he's the richest man on earth. So he has more resources than Twitter, which is kind of crazy. He has more resources than Twitter. So he doesn't care, he just keep filing extensions and all this type of stuff. Now, I think that this deal was kind of doomed to fail a little bit because, and we had talked about it, I think, maybe like 2 months ago, is that valuation is ridiculous. The valuation that was originally proposed. And I think for the last month or two, he's really just been looking for a way out of that. Now, do I think that Elon Musk wants to buy Twitter? Yes. Do I think he wants to buy it for that price? Absolutely not. So I think that it's one of those things where he's going to make a case where he's going to say, listen, I asked for this material information. You didn't give it to me. Okay. I did my own data and I did my own studies. And based on this information, and I assume that it's going to have to do with the amount of bot accounts and scam accounts and stuff. There's 40% scam accounts. Obviously, I just pulled it out of my ass. 40% scam accounts. Therefore, I want to cut my valuation by 40%. Something around 20 billion. Or that'd be more than 40%.
Like
but
30, yeah.
Something along those lines where he can technically make a justification for it, but it's one of those things where, like, all right, Elon, like, we kind of knew, like, this was coming.
You already fucking agreed, dude. Just fuck it.
So I think that it's one. Again, I think that it's one of those things where I think that he is going to, either revise the deal based on the material information or the fact that he didn't get material information, or he's going to just completely back it up, or, not back it up, completely back off of it, decide that this isn't what he wants to do, and decide that this isn't what he wants to do, and basically just wrap this up in court until somebody makes it go away or something happens, or he reaches a settlement for like $2 billion, whatever. Like something like that. Because the other thing is, and we, right from the get-go, that what was important was that we always knew that if he went through with this deal and Tesla went below that 650 mark, he would get margin called. And he would very quickly not become the richest man in the world.
Not dope.
Not dope. So we knew that just based on that alone, and of course Tesla, since the announcement of the deal, Tesla's at 752 right now. Or I guess after the deal came out, and after hours it went up to 770. But since then, Tesla's kind of gotten smoked a little bit. So I do think that in the end, this wasn't going to happen. It was kind of doomed to fail for multiple reasons. And he either does one of two things: revises it at around $30 a share, which again is that was Goldman's original target on this. And so that's something where, like, that kind of feels like face value where it would be profitable to shareholders. Or, it if it continues to go down, because Twitter's currently at 36. So if it continues to go down, maybe he offers like 30, 35, something like that, to where it's still profitable or fair value to shareholders. But also it's not something where he can blow up, his shares in Tesla and be super collateralized. And, or he, like I said, is that he just takes them to court, spends, an exuberant amount of money, 3 to 5 years in court, maybe honestly even more if he wanted to. And maybe like the next Twitter CEO just makes it go away or something.
Yeah, until someone else just offers. They're like, dude, we're tired of hearing about this. We're just going to buy it.
Yeah, or he just comes to a settlement with them. Management gets some big ass, fee. Like management, like instead of returning the Elon comes to like a settlement with everyone. Instead of it going to the shareholders, we'll see like the CFO's assistant on like a yacht or something. You know how these things work. So.
I mean, dude, he knocks up all his fucking employees. He just had, dude, he's building a fucking army out there. He's got how many fucking kids? He's got 10. He's got like 7 different chicks, dude. Now oh my God, I'd be frightened to be a female employee at Twitter right about now. All right, well, I know we don't give out financial advice, but I think this is financial advice that if you go on a bachelor party and you get a tattoo of the bachelor's face on your arm, your wife can't be mad.
I like it. It wouldn't look good on me.
No, we are putting that rule into effect that if you do go on a bachelor party and you get a tattoo of the bachelor, your wife cannot be mad. So we're just putting that out right now.
I like it.
Okay, that's a rule set up by us. Okay, guys, we'll see you on Wednesday for CPI. See ya.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.